right, let's get this thing going. Let's get this thing going. All right, shout out to everybody that is in Eyl University. Shout out to all the earners that are in the investment club. I love it. I love the reaction that we get inside the investment club. I love all the feedback. I love all the sharing that's happening. But what I love most is that even though last week wasn't ideal, we didn't panic. And that's the message tonight. Don't panic, right? Because when there is panic, right, we don't think rational. Right? We make bad decisions. But if we are understanding of how the market moves, then we know that every time that somebody gets fearful, we have an opportunity to get greedy. And so that's the focus of the night. Don't panic. All right, y'all know who that guy is. I'll make sure I see everybody Thursday night at 7. We're going to go over some things. We're going to talk about some new entry points for some companies. And we're going to talk some ones that we exited. I know we talked about CrowdStrike earlier, but we're going to talk how we exited, why we exited, and we're going to talk about a few other companies, but I won't give everything away tonight. So let's start this thing. All right, so like I told you, the theme is don't panic. So what happened, right? It's always important to know what happened. Sometimes we're busy in our day and we're trying to figure out, well, the market's down, Well, why was the market down? All right, so let's peel into that a little bit. All right, so last week the Dow fell, the S&P fell. Well, actually, the Dow had a 1% rise, but the S&P fell and the Nasdaq fell. So we're talking about tech and we're talking about the S&P 500. So was it the terrible pullback? No, it wasn't. In fact, the S&P only dropped 2%. Right? And the NASDAQ dropped 3.6%. So there was a major drawdown in tech. Not major in terms of the percentage that it pulled back, but major in terms of the companies that were affected because of the pullback. And so we saw a lot of our favorites, especially inside of the semiconductor sector, have a pullback to 10 to 15%. All right. So the AI pullback story is something that we got to be mindful of, especially when we're talking about geopolitical events that can happen. And obviously with the presidential election and the turmoil inside of that, it makes things a little bit confusing, but the market is trying to find certainty. And so you're going to start to see some ebbs and flows. And we definitely saw that last week. But again, we did not panic. So shout out to y'all. So let's go into the why. All right. So anytime we're investing, there's a couple of factors we want to look at. Right? We always want to look at trend. We want to look at volatility, but we also want to look at economic factors. We always talk about CPI or PPI, but let's talk about sometimes geopolitical factors that can play a role inside of our investing. All right. So last week, the presidential nominee for the Republican Party, Donald Trump, said that Taiwan should pay for their U.S. defense in an interview with Bloomberg Businessweek published last Tuesday. In addition, the Biden administration is considering using the most severe trade restrictions available if companies, including ASML, continue to give China access to advanced semiconductor technology. And so we talked about the U.S.-China relations. We talked about the importance and the location of Taiwan. And now we're starting to see perhaps tariffs or taxes putting on this industry, right? And so if one administration is saying, hey, you've been protected for free, right? I think it's time that you start paying for security in a sense. That's going to affect the way business gets done between us and obviously a country that is super, or territory that's super important to the global economy. In addition, you have another party that's saying, okay, well, if you're going to continue to give advanced technology to other countries that we kind of don't see eye to eye with, we're going to start taxing you, right? And so now if the cost of business goes up, the cost that they're going to start charging goes up, that affects business. And so we've always mentioned geopolitical tensions as something to be mindful of when investing, especially Taiwan Semiconductor. Now, y'all know, and Ian, shout out to my brother Ian. He always talks about Taiwan. That's my company. And it's true. It's a company that I've been watching for years. It's a company that I'm invested in. Right, full disclosure, but it's important. And if you don't think it's important, well, we're going to go into the numbers of why it's important. This was published in Barron's. So why the huge emphasis on TSM? Well, let's check some of these numbers. So first number is 92%. Think about that, 92%. So Taiwan Semi makes 92% of the world's advanced semiconductors with transmitters and components smaller than 10 nanometers, according to the Semiconductor Industry Association. Korea makes up the other 8%. So you're talking about two parts of the world that make up nearly 100% of semiconductors under the parameters of 10 nanometers. So we're talking super small, which is an issue when we talked about Intel. They haven't quite developed a nanometer that can be smaller, right? Or it's taking them a longer time. And so as they take time to build, you have companies that are already doing it at a large scale and they're reaping the benefits of it. So 92% of all of the semiconductors that are under 10 nanometers are produced by Taiwan Semi. The US, right? We want to make advanced chips in this country, right? Obviously, we talked about them putting foundries here in America in detail. But here's the goal. You might not know this. The goal is to have 20% of the advanced chips made in our country by 2030. So we're 6 years away from having 20%. That's a huge shift, right? When we're talking about scale and we're talking about market viability. To go from 0 to 20 is large, but it talks about the emphasis that we have on advanced semiconductors. So Taiwan's doing 92%. They're building foundries in Arizona right now. That's going to cost over $40 billion. You're going to start seeing production coming from there. So they'll still have a large percentage, but the U.S. is saying rather than importing them, we can actually create them and start exporting, which changes business. Let's look at the next number, 33%. So all those chips are made for semiconductor companies that operate without their own manufacturing. So Taiwan Semi is a huge supplier to NVIDIA, to AMD, to Broadcom, to Qualcomm, and to others. So when we're talking about the companies that have pretty much dominated this year, especially NVIDIA, definitely Broadcom, there is a common theme. They are getting their chips from the same place. So that means roughly 1/3 of the four companies that we just mentioned, 1/3 of what they spend to make chips goes to Taiwan Semi. So a single supplier is amounting to 33% of the total cost of goods sold for a company that isn't typically a good sign, right? But it also talks about the sign of how critical the Taiwan Semi is, not only to the semiconductor space, but the entire global economy. So why the emphasis on it? You're starting to see some of the numbers. All right. Let's look at another number, 45%. So NVIDIA and others get their chips from Taiwan Semi and they sell them on, right? So the payments from Microsoft, Meta, Alphabet, Amazon, and Tesla account for 45% of NVIDIA's total sales. So when I'm talking about a chain event, right? So imagine how important this region is, how important this company is. Not only does it affect NVIDIA, but if it affects NVIDIA, right, or affects NVIDIA, now it affects Microsoft, Meta, Alphabet, Amazon, Tesla. We're talking about some of the largest market cap companies in the entire world. So Apple doesn't buy a lot of NVIDIA chips at this point, but Apple accounts for 27% of Qualcomm sales and about 70% of Broadcom's. So again, you can see how important this becomes. So what does this mean? Theoretically, if there's no Taiwan Semi, that means there's no iPhones, AI servers, and other electronics on which people have come to depend on. That's why Barron's take him called the real risk of disruption at Taiwan Semi a global depression, not a domestic depression, right? Not an international depression, a global depression. That's why we got to make sure that we cover it. So what happened over the past couple of weeks? Well, this is their chart. And if we're looking at it, I'm looking at Yahoo Finance. And for those of you who might be beginners in this space, what I have here is the yearly chart. And I've got my Bollinger Bands and I got a few moving averages. I think I used my 50 here. I got the 100 and I got the 200. And Ian, I know you're going to kill me, but don't. I still got my RSI up there, my relative strength, because I just got to check to see if the stock is being overbought or if it's being oversold. Now, how do I tell? So if the number is between 80 and 20, right? This is that median area. Anything that goes above 80, that score, that's on the bottom right, that means the stock has been overbought. If it goes under 20, that means that the stock is now being oversold. So this one's leaning toward more of the oversold, which is an indicator that, okay, this might be an opportunity to now get into this company, right? So if we look at top, it topped that at 193 and has fallen back all the way down to its moving average of about 166. I know it went up a couple dials today, and we were thankful for that. But this is how we're looking at charts, and we can set this up inside of the classes. If you've been to some of the classes, you already know how this goes. All right, let's keep going. So We saw it go at its high of 193.47 and we saw it pull back. Don't panic. Please don't panic, because there's room for opportunity. This is when people actually now invest. When you become seasoned and you become more knowledgeable of the space, you look for these opportunities because you know there is scale on the upside if you do this at the right time. So I always get the question, when should I invest? Well, I always have this rule of thumb, especially if I'm just dealing with an equity, meaning the stock. I ask myself, has a stock pulled back 15 to 20% from its 52-week high? So you don't even have to do the math. I did it for you. TSM's 52-week high was $190.47. It opened today at $166.61. So let's just bare minimum 15%. If I multiply the 193.47 times 15%, it gets me to 28.95. I subtract the high from the percentage amount and I get to 164.52. Now I told you it opened at 166, so it didn't quite hit the 15%. So there's a couple things that can happen here. I can say, hey, it didn't hit the 15%. I can't touch it. Or I could say, you know, it's getting close to the 15% based on the volatility that I've seen. It could go lower. And this is why when we read our charts, you have to be a disciplined investor. So you could say, all right, well, Troy, it didn't hit 15%. I'm not touching it. Maybe if it does, I'll be interested. That's fine. Because I'm looking at it as another opportunity. I'm not panicking. There's opportunity, right? So if a stock price is falling by nearly 15%, that means in the option space that the call option prices have fallen as well. And y'all know I'm always looking for depreciating asks and bids. I'm always looking for them. Why? Because that tells me that solid companies have had a pullback. And now I have an opportunity not only to get it at a 15% discount, right? But usually when we talk about the option call prices, they usually double in depreciation. So if the stock's down 15, we're going to see the option call drop down 30, right? If we see it down 20, we're going to see the option call drop down 40. All right. So there's always opportunities, but we just have to recognize them. All right. So I know that it's had a tough week. I'm going to my options calls. I'm looking at my chains. Now, notice what date is highlighted, right? January 16, 26. Well, Troy, we're only in July of 24. Why are you looking so far out? Well, a couple of reasons, and I've explained this plenty of times. I don't have the time to be maneuvering on a day-to-day basis. So my options trades are not going to be on a weekly. They're not going to be on a monthly. They're going to be leaps that are extended. Right. And so here I'm looking out to January 26th. And now I'm looking at what possibility of a call could I get into. And so the next thing I'm looking for is something near the money. Okay. And so I know that it's trading at 168 at the time. And so the next barrier would be 170. And next, so after I look at the 170, now I look at the net change. Now the net change is going to tell me if things are moving in a positive way or a negative way. Well, if I look at this chart, which strike has the largest net change on a depreciation side? You got it. It's the one. It's the negative 83, right? Even though 180 has an interest that is huge, right? I'm looking at the depreciation from a net change, and I'm saying 170 might be a place I can look. There's depreciation happening. Let's go take a look inside of that. All right. So I go there. All right. This one actually, I'm going to bring my other screen up. Let me see if I can do that. And I'm going to add this to the stage. All right, perfect. That stage is up. And so now I can use this screen. All right, so if I'm inside of here, I'm looking at that 170 call. The first thing I have is, oh, that didn't work. Let me go back to my other screen. No problem. That's why you got to adjust on the fly. You're back up on stage. All right. So this is the underlying price for the stock. This is TSM's stock price. We talked about it hitting 193. You can see it marked here at the top of this triangle. And then you can start to see a climb going down, right? You can see it going down to about 165. And obviously today it went up a couple dollars. So now it's going to about 168. But that's fine. That's the underlying price and volatility of the stock. I'm always looking at the option, right? So let's go to the next slide. Like I told you, right? If the stock is going down 14%, look for the option call to go down even further. And so at its peak here on is that the 10th? Yep, the 10th of July, it was trading at 53.16, right? And so if I look where it's at now, we're about touching what, 35? All right, so we're looking at 35. Let's do the math on that. You don't even have to worry about it. I did it for you. All right. Again, we don't panic. So that January 16th, 26 call that was at $170 strike price, it once was asking for 53.16, but is now dropped to 35.05. So what does that mean? And for my beginners, I put some cliff notes in here. The January 16th, 2026, that's my expiration date. My strike price is what 170 represents. But that drop in price, that price volatility, that represents a 35% depreciation on an option call. Now, I told y'all, my sweet spot is always 40%. So let's think about this. Am I going to be a disciplined investor, or am I going to say it's close enough? These are decisions that you got to make in this space, right? So it didn't hit 15%, right? The asset didn't drop 15%. It was about 14. And now the option didn't really hit 40 yet, but it's at 35. And so I got to make a decision here. Is this something I'm going to get involved in? Even though it didn't quite hit my metrics, this is when being a disciplined investor comes into place. All right. So let me go back to that because it's important, right? And so these are the decisions that you're going to make, right? When you're looking at equities, when you're looking at options, always trying to find a depreciated one. Always try to give yourself enough time. And then you always can do some research. Research never hurts. But I talked about this in Market Mondays Live in Chicago, and I brought it up on Market Mondays during our live tapings. I said, look, I always want to use AI to my reference point. Like your AI can be your guide when you're trying to find research on a company. And so most people say, well, Troy, why do you find your information when you find information? I'm like, well, there's a couple places you can find it, but let's just start with AI, right? Rather than looking all over the place, we can go to it. And I love to use Claude, and y'all know I'm big on Anthropic. So let's just see how Claude works in real time. So I'm going to prompt it. I'm going to say, well, it's saying good afternoon, Troy. Let's start with this. So Claude, how vital is TSM? Oh, I got vital wrong. Vital is TSM to the global, let's see, economy. Let's see what Claude has to say. All right. So now it starts giving you the information. It talks about its market dominance. It talks about its advanced technology. It talks about its supply chain significance, which we kind of highlighted. It talks about its economic impact, and it talks about the geopolitical importance, right? So this is all vital information that we can just start peeling just using AI. All right, so now that I know the global impact, I want to know, does TSM, get that right, does TSM have a competitive moat? Let's see. Why is my cap lock on? All right. So I'm always looking for companies that have moats. And now it's giving me a list of 7 different moats that it has. It's technological leadership, it's scaling in capacity, it's customer relationships, it's expertise and know-how in the space for sure, it's ecosystem, it's financial strength. And then again, here comes this geopolitical positioning. And so again, these are moats. Now, let's see what else Claude can do. So is TSM a sound investment? That's important. Let's see if it answers this. I don't know. Investment in terms of the future of AI. Let's see. I'm asking it about itself. All right, so now it gives you the pros and the cons. And so now when you're looking at a company, and I'm using TSM as my example, but you can use this for any company. This is how you can use AI to your benefit, right? It can tell you this. And now you can use the technical analysis, you can use the fundamental analysis, and you can use this third piece, this AI analysis, to help you in guiding your decision when picking a company. So Hopefully we see everybody in there Thursday night. And hopefully everybody's made some money. So we appreciate y'all. Let's get back to business, y'all. Peace.